Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? Hope everybody's good. Welcome back to our Fin Tips here. I have got a bit of an alert for you, a warning, a request, a demand. Please stop buying houses. You know, in my neighborhood, my town, almost the whole county that I live in, there is no 3-bedroom, 2-bath house under $450,000. I don't live in Extravagantville, right? I grew up in a normal working class area, which was largely hospitality-based type business because we're in Florida and it's by the beach and stuff. So there were pockets of wealth, but there really wasn't like a whole town just filled with rich people. When I was growing up, I would say the average house was probably $120,000, and we thought that those people were cool, right? They had good money. And now you can't even see it under $450,000. What's going on? Why are we buying? Why do you got to go? Why do you got to buy houses so much? Everybody says, well, the Fed's going to raise rates. I got to get out there, man. I got to get this before the rates go higher. Do you? Right? Let's think about the stats behind this. Let's look at the last time the Fed was raising rates, which wasn't that long ago, and compare that to home prices. So if you're out there thinking that you must sell your house, this number is too good to be true, I'm going to sell it, go rent somewhere, which you can't rent for nothing anyways. It costs you an arm and a leg. And then I'll buy a house when things get cheaper. What's the hurry to do this? Take a look. So what I'm plotting for you here, I even did you a favor. I took the target Fed funds rate, the upper limit. So they always have a range. They'll say the Fed funds rate, we're going to change to 0.25 by 0.50. There's the lower limit and there's the upper limit. So I put the upper limit just to show you even a higher number, right? So here's the last time the Fed started raising rates. This goes back, well, this is one of the last times, sorry. So going back to about late 2004, 5, getting in there, they raised rates. What happened? It caused a recession, right? Typically that happens. It's actually normal and will likely happen again. So caused a recession. Home prices down here in purple actually started to decline. It took years for home prices to decline. And notice that I will show you the 10-year rate in a minute, but you have years of market declines here with the stock market. The Fed funds rate came right back down, right? They can't raise rate. They're never going to get out of this downtrend. In fact, if I take this here, take out the existing home prices, go back, look, they're in a downtrend of rates. A lot of you are older. You remember, hey, I remember when we paid double digits for a home, the interest rate, right? They can't pull themselves out of this. There's just no way at this point. I don't know how you change things here unless we do a major reset. I'm not trying to be bearish. I'm just saying they've got their work cut out for them, right? So if you think raising rates, the Fed raising rates, which is not the mortgage that you pay, but the Fed raising rates is a reason for you to rush into buying a home, look, you're about to walk into a home where initially you'll feel good about it, and then you're going to start to see it sell off. The last time this happened, well, we had Feds dropping rates. They did asset purchases. They had Washington gave out money from a helicopter. They basically just dropped a bunch of money. Same thing. They started raising rates. Did it affect the home prices? No. You just kept paying more. It became more expensive to buy a home in that aspect. Now we have rates at zero, essentially, right? And we have a housing market that's been on fire even through a raising of rates. What do you think happens when they say, okay, we need to start normalizing, right? That's their key word for raising rates. They just say normalizing. We want to normalize the balance sheet. We want to normalize interest rates. We want to normalize inflation, right? So they start raising rates again. You have home prices that are exceeding this area in here, right? They could handle rates at about this level, 1.5 or so. Are they going to be able to handle up here or handle it when we go back there? I doubt it. Right? I don't see that, how you're going to be able to have that happen. So if you're looking to buy a home and you have to, okay, go buy a home. No problem. Hopefully it's a long-term position for you. But those of you that are buying homes thinking, oh man, I'll keep it for 2 years and then I'll sell it. Careful. I'm hearing that more and more and more. People are thinking like, oh, home prices just go up. That's just what it is. That's how everything works. Now, let's do one more thing here. So we're going to go back to the screen. I'm going to take out the, let's go 10-year versus here. So we'll zoom in, make it a little easier to spot. All right, so now in purple, what I have is the 10-year Treasury rate. This is the rate that most home loans are based off of, or to some degree, used to finance that home purchase. So 10-year rate, you can see it there. And then down here I have, now in orange, sorry for the confusion, I have the existing home price, right? What happens when rates start going up little by little? This is not a significantly large move, but it is it's a pretty large move. What happened? Home prices didn't do anything. They just kept plowing ahead. In fact, if I could just zoom out a little bit more, give me a second to try to show you. We'll go about 2000. So we'll take this here and just say 2000. Just to make it simple. Okay, there you go. So what do we have? Home prices rising, interest rates lower, interest rates flatlining in here. All of a sudden, interest rates get a little too high and home prices come down. We go into a recession. That's because the Fed lowered their total rates there, right? Notice how it took years and years where home prices stayed very steady and at lows, and I get it. That was a big deal when that happened. But all of a sudden, we have rates starting to creep up again. Couldn't make it happen. They fall back down. We go into a recession. Coronavirus. Couldn't have seen that coming. I mean, maybe most of us couldn't have seen that coming. Anyways, we have rates now at historic lows starting to rally back up again. And you notice home prices, home sales are starting to slow down a little bit. Just why? Why do we have to chase buying these homes? If interest rates normalize back to, say, 2.5 somewhere in here, and I'm talking about the 10-year, I'm not talking about interest rates, 2.5, 2.75 somewhere in there, right? Wait, you're going to get a little pullback in your home prices anyways. What's the hurry? What are we doing out there? And it just blows me away. Now, I consider myself a bit of an expert on Zillow. Not that their Zillow prices are, very accurate, but I watch things move. I save homes all over the place. I just like to watch. I don't know. I'm never buying. I just like to watch. We are losing our freaking minds, right? So you complain about these home prices. Don't chase them. Now is not the time, right? It's like the stock market. Now is not the time to go invest large sums of money. It just isn't. Right? And so that's more of an opinion on my end, which I usually stay away from. But the bottom line is interest rates are already going up. The Fed says they're going to raise rates or normalize their balance sheet as well. And so you know that there's headwinds coming, right? Right now you're getting raked over the coals. They put a house up for $450 and they're like, yeah, we'll decide on Sunday. Send your highest and best offer. We're not playing games. That's fascinating to me. Anyways, be careful. Not the time to buy a house, not the time to invest strongly in the market. That's coming from a financial advisor. My job is to get people to invest. I say don't do it. Dollar cost average. Maybe you invest and hold some money back in cash. That's what we're doing. Anyways, I appreciate you watching. Have a great rest of your weekend. And am I wrong? Let me know in the comments. Am I wrong? Do you think home prices are just going to keep going through the next rate rise like they did back in 2016, 17, and 18? Am I off track here? Am I somehow being guided down the wrong path? I don't know. Well, you guys enjoy. See ya.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.